Do you ever wonder where you get a lot more in life than in other parts of life? Well, with coffee, I can't give you a good answer, but with reverse mortgage, there definitely is a process on why you get a lot more mortgage in some situations versus others. So without further ado, let's dive in. Hold up. I get a lot of questions on how much can I get for a reverse mortgage? I want the absolute maximum for life, for retirement, for my kids' down payment, for an early inheritance, whatever that might be. Of course, the answer is it depends, but a big part of it is what age you are. And I'll explain why that is in a moment. Also, it's important for you to realize that sometimes you can actually get more reverse mortgage if you wrap the inter alia mortgage around more than one property. I'll also talk about that in this video. And we'll talk about all the different levers and what you can expect for a mortgage amount based off of all the factors, whether it be age, property type, area. These reverse mortgage lenders have a very good formula on figuring out what is optimal for themselves, of course, but also for you. Without further ado, let's get into it. Let's talk about the basics. Unlike a real mortgage where you're paying per month at TD or Scotia, and they usually, of course, base you off of income. Most people who get reverse mortgages, they don't make really any income. Their pension income gives them maybe $50,000 to $80,000 of mortgage power. They need a lot more, and they don't want the stress of paying for a mortgage per month. They've done that their whole life. They just want to relax. So in a reverse mortgage, of course, it's payment optional. It basically age is the biggest factor. Now, imagine this, and it's hard to do, but imagine you're in the bank's shoes, and there's a 55-year-old and an 80-year-old, and the only way that the money can get their money back, right? The bank can't get their money back until the house is sold or both spouses pass away, and of course, the house after that is sold. So, if someone's 55, they're less likely to pass away or sell the house than someone at 80. Therefore, they will give you a lot less at 55 because they may have to hold on to not getting any payments from you for 40 years, 30 years. Now, if you're 80, it's probably lower, hence why they're more comfortable giving out larger stashes of cash because they know it's likely going to come back to them sooner. That's the basic math. Now, you might ask, what are the ranges? Well, typically, and again, it all depends. You can talk to me and we'll do an analysis. If you are just at the bare minimum of the 55-year range, you're mortgage free, 20 to 25% of your home value is typically where they'll start. Once you get over to the age of around 70, we're talking up to maybe 35%-ish. And of course, once you're 80 or more, we're talking up to 55, or some lenders do 59% of your home value. That's the biggest factor. Now, a scenario here, you might be asking, well, what if one spouse is 80 and one is 65? Which one do they go off of? Well, let's talk about the technicalities of when can they call the loan? Well, it's when both spouses pass away and or the house is sold. So they're going to base their underwriting on the younger spouse. So the 80-year-old, they're not going to give you more mortgage. Some lenders might find a happy medium. I haven't really seen it. It doesn't really make sense. Of course, policies change all the time, but keep in mind that is a scenario to think about when you are budgeting on how much mortgage you're able to take out with a reverse or payment optional loan. So let's talk about a inter alia or a blanket mortgage, and that is, for example, at a very extreme example, but it does happen. A couple in Vancouver has a home in Shaughnessy. It's worth closer to $5 million. They want to take out $3 million because they want to close on 3 condos in Toronto, which are really suffering, and they're not getting a lot of loans from the actual banks. The appraised values are lower. What can they do? What they did is they got an inter alia or blanket mortgage where they basically got up to, maybe in this case, 35% of the home value for not just their Shaughnessy home, but also the 3 different condos, which at the time, of course, are mortgage free, right? Once they do that, the whole mortgage total they get across all the properties lets them close on, the 3 condos in Toronto. So you can actually wrap around other properties, whether they're about to close, their existing assets you have. As long as they start off mortgage free, you can wrap around them, get more reverse mortgage, and get to your goal. Again, payment optional. They don't have to pay on any of those loans until they pass away and or sell the house. So that is the way to do a blanket mortgage. Now, the final criteria on what really is the underwriting, because people get very confused, like why do they give this 55-year-old that much and that 55-year-old a little bit more? Well, again, think of yourself as the lender. They're budgeting for when do they get their money back based off the house being sold or someone passing away, or rather both people passing away if there are two, and also other risk factors. When they have to resell the house, well, what are the things that might make it hard to sell? So, well, you've got number one, the ages, we talked about that. Property type. Condo versus detached home, very different risk profiles and underwriting. So they will generally look at how marketable those properties are and lend accordingly. Of course, there's area. If you're in the suburbs or somewhere where it's pretty hard to resell, or it's for a very niche buyer, you're on Vancouver Island, they'll probably lend you a little bit less because it'll be harder for them to sell, albeit potentially at a lower actual value based on where the market is. These days it's pretty unpredictable. So it's also about what's the actual property type. You've got the condition of the property. They will run a very thorough appraisal. So you have a very old house that needs a lot of repair when they sell, and they're not, well, maybe it needs a lot of repair today. Imagine in 20, 30 years when they actually call the loan, right? The house is being sold. They're going to factor that as well. And again, the last part is age. So all of these factors, age, property type, location, condition, these are all reasons and ways that lenders look at their underwriting, and they decide how much they're going to loan to you. And, from there, that's where everything gets sort of underwritten. So hopefully that adds a bit more clarity. And there are some proactive things you can do, especially around upgrades on your house. Sometimes that's the best way to get a bit more loan, especially if you find that it's on its last legs. So hopefully that is helpful on ways to understand how much reverse mortgage you can get. And just to conclude, what did we talk about today? We talked about ways to get more on your reverse mortgage. And the biggest one is age. So if you're 55, which is the bare minimum age you need with a mortgage-free home to get a loan, typically up to 25% of your home value. All the way, if you're 80 and above, you're going to get to the upper end of 55 or 59%. Sometimes even at 59%, you do not have enough reverse mortgage to, let's say, close on some condos or pay off some debt, or maybe even do an investment. That's where you can wrap a blanket mortgage or inter alia mortgage around other properties you own. The lender has more assets at its disposal, and it will lend you more. Do not forget, it's not just the age, and of course, it's the lower of the two ages. If there's, of course, a couple, it's going to be the property type, what's the location, what's the condition of the property. Those are all things that they have to underwrite because they have to look at the worst case when they have to sell the house for you, or of course, when you sell the house. They have to understand and calculate. You're not getting a payout for a long time, right? Especially since it's payment optional, these reverse mortgages. It just has to make sense for them. And it's reasonable if you think about it. So with that, thank you for watching so much. And any questions you have, let's run some personal scenarios on how much you qualify for. Give me a shout, and we'll get on to a phone call and run some numbers. Thanks for watching, and take care of yourself.